The data looks so positive. We've got inflows into the Bitcoin ETF. We've got the approval of the Ethereum ETF that might get traded in a few months from now. Why isn't the price moving that much of Bitcoin and Ethereum? We did see a jump in Ethereum, but Bitcoin isn't yet at all-time highs. What's going on? The reason why Bitcoin corrected was not the Bitcoin ETF demand, it was long-term holders selling. Let's have a look at on-chain data most people aren't considering. Let's look under the hood. We're starting off with this chart. This is the long-term holder spending binary indicator by Glassnode. So in blue, we've got the long-term cost basis. In orange, we've got the long-term holder supply. So that's over here on the right scale. So the price tends to rarely go below the long-term holder cost basis. Whenever it does though, whenever the long-term holders are in the red, then it makes sense to buy aggressively. The long-term holders are now very far away from being in the red. But have a look at what the supply is doing. Whenever the price rallies up, the long-term holders tend to leave their Bitcoin. They tend to sell. Whenever there's a correction, they tend to buy or at least hold. Now that buying and holding lasted for quite a while up until the beginning of the year. Long-term holders tended to distribute again, and that's what put quite some dampening to the price development of Bitcoin. There's another way to look at this. We can look at the Bitcoin liveliness. As in, when it moves a lot across short-term holders, then Bitcoin is very lively, as in a lot of transactions are being made. When Bitcoin is mainly held by the long-term holders that just buy and accumulate and never move it, that's when Bitcoin is less lively. That's when we are in an accumulation regime. So that's when the background here is tinted in green. So you see here at the beginning it's green, then it's red, then it's green. Now recently it turned green again. So what we've seen during 2022 was mainly the liveliness going down. So the short-term holders didn't trade Bitcoin that much. We simply just saw accumulation by the long-term holders. Then once we see the Bitcoin price close to all-time highs, that's when the long-term holders tend to distribute, tend to take profit, right? They bought over here for around 20K and then sell over here for around 50 to 60K. Now there's much less selling happening again. The liveliness is going down. Thus, there is less sell pressure by long-term holders, which is good for the price. Another way to look at this is to check out the realized price. So how much of profit and loss actually gets realized on chain? So let's say you buy a Bitcoin at 20K, you don't move it for a long time. Then at 60K, you decide to move the Bitcoin again, right? This is what all this on-chain data is looking at. Then we calculate a realized gain of 40K in this instance. And so that's what we're seeing over here. The realized cap net position change. So how much loss versus how much gain has been realized at any point in time. And when long-term holders tend to realize a lot of gains, that's when the price development becomes less stable. That's when more and more Bitcoin is in the short-term holders' hands, not in the long-term holders' hands. You want to have as much supply as possible in the long-term holders' hands because that artificially depresses the Bitcoin supply, thus increasing the price. And so we have seen quite a bit of that profit taking happening again with the recent all-time high. It's nowhere near though compared to the beginning of 2021. That makes me believe that the current rally isn't yet over. There's not yet enough Bitcoin in the short-term holders' hands. And so let me show you my favorite indicator of all of those numbers, and that's the value days destroyed multiple. So what does that mean? Let's say you've got one Bitcoin and you didn't move it for 1 year, and after 1 year you decide to move it, then you're destroying one value year of Bitcoin. If you've got, say, 12 Bitcoin and you don't move it for 1 month, and then after 1 month you do move it, again, you're destroying one value year. By looking at the value days destroyed, we can find out what the long-term holders, the heavy whales that tend to not sell, we can find out when they're actually selling, when they're potentially depressing the price. So usually they wouldn't do anything, but once they do move their Bitcoin, that's a potential red flag. And we can see over the cycles that this tends to peak up very nicely when the price also tends to peak. Whenever this is depressed though, it's a good time to buy. And again, this peaked up very nicely at around 40K. We still went up to 68K afterwards, but still it peaked pretty highly when it was a good time to sell. And recently it peaked yet one more time. Sometimes we see multiple peaks in a row, right? From the first peak to the last peak, we had another 10x. In the rally of 2021, we also had 2 peaks. I believe we will see another peak here again. Will this be at 100K or at 150K? Your guess is as good as mine. I simply just watch this metric very closely. You can have a look at this in lookintobitcoin.com. That's here in the background of this chart. Simply search this, lookintobitcoin.com. Monitor the value days destroyed multiple. This is, I believe, a very good measure to time potential exit opportunities in Bitcoin. If it's your first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. If you've got Telegram, feel free to join us. It's 100% free. Looking forward to chatting with you over there in Telegram. Cheers.